Tuesday morning, every index fund in America has to buy Reddit. If you own it, you've had a strange 2 weeks. On the 31st of July, Reddit fell 21% in a single day. It had just reported its biggest quarter ever and a 31% profit margin. Then 2 weeks later, an index committee sent one line to the wires. The stock jumped 12.5%. Same company, same filings, nothing changed inside it. Here is the arc, and almost nobody puts it on a chart. On the 30th of July, Reddit closed at $178.04. The next day, $140.67. Then the index news at $177.91. 2 weeks of drama to get back where it started, and it is still 37% below its high. So what is it worth? Not what it costs. What it is worth. I rebuilt every model Wall Street and the great investors actually use. A cash flow model. Peer comparisons, Wall Street's own price targets. A screen from 1949, and 10,000 simulated futures. By the end, you get one price and one word. One rule first, and then the desk takes over. The models run on today's price, not last week's. The index news already moved it. So we are valuing the company you can actually buy on Monday. I will be back with the number.
On Wednesday night, S&P Dow Jones Indices put out a short press release. Reddit joins the S&P 500. It replaces AvalonBay Communities, a landlord that is being bought by a rival. The change takes effect before the opening bell on Tuesday. That is the whole event, one paragraph. And an index fund, remember, is just a fund that owns the whole list in the same proportions and never picks. So why does a paragraph move a stock 12%? Because of what sits behind the index. S&P's own survey counts the money that tracks it. Roughly $9 trillion sits in funds that simply hold whatever is in the index. Those funds do not have opinions. If Reddit goes in, they buy Reddit. That is about 260 times the whole value of the company. Now be careful with that number because most people are not. Another $4 trillion is derivatives, that is paper and it buys no shares. Another $7 trillion is money that is only measured against the index. Those managers still choose, and the survey is from the end of 2024. It is the newest one there is. And here's what nobody can honestly tell you. S&P has not published how much of Reddit counts as freely traded. Without that, the exact number of shares the funds must buy is a guess, so we will not guess. What we can say is this. On a normal day, about 4.7 million Reddit shares change hands. Index buying is 1 week of weather. The business is the climate. So what are they buying? Reddit is a message board, tens of thousands of them run by unpaid volunteers. Last quarter, 130 million people used it every day. 514 million used it every week. 2 in 5 of the daily ones are American. Hold that thought, it matters later. The money comes from 2 places, advertising and licensing. Over the last 12 months, Reddit made $2.78 billion. $2.63 billion of that was ads. $153 million was licensing, which means selling the archive of human conversation to companies training AI. That licensing line is 5.5% of the business. 5.5%. Remember that the next time somebody calls Reddit an AI stock. And the business itself is genuinely good. 91 cents of every revenue dollar is gross profit, which is what is left after the cost of serving the page. Last quarter it turned 42% of revenue into cash profit, and cash profit just means the money left before the accountants take out the paper charges. Over the year it produced $1 billion of spare cash. That is about $2.8 million a day. It holds $2.79 billion in the bank and owes nothing. Now the crack. Reddit's own filing says it relies in part on internet search engines such as Google. That is the company's language, not mine. And last quarter American daily users went down. 53.5 million, then 53.2. It is small. It is also the first time down. Those are the users worth $11.85 each. The rest of the world is worth $2.26. Time for the models. First, the cheap way. What do people pay for $1 of sales at companies like this? Enterprise value is the price of the whole company once you take out its spare cash. Reddit trades at 11 times a year of sales. Pinterest 3, Snap 1.5, even Meta 6.5. Reddit is the dearest company on its own street by a long way. That looks damning, so let us be fair to it. Reddit grows about 3 times faster than those peers and keeps far more of what it earns. Scale that peer figure up for the growth, and a fair price is $113.81. That is rung 1 on the ladder, and rung 1 says the market is paying too much. Rung 2 is the same trick on profits instead of sales. Those peers pay about 10 times a year of cash profit. Reddit's own guidance for this quarter, and guidance just means the forecast a company publishes about itself, works out at $1.5 billion a year. 10 times that plus the cash in the bank gives $98.81. 2 models in, both say today's price is too high. Rung 3 is the one every bank builds. Think of Reddit as a machine that prints cash. It printed $1 billion last year. Ask what you would pay for the machine if the cash grows 40% and then slowly slows down over 10 years and you charge yourself 10.5% a year for waiting. The answer is $363.51. That is the widest disagreement this show has had. $99 against $363. Same company, same filings, same night, so bring in the people who are paid to decide. 2 banks published fresh targets the day after the July crash. Piper Sandler cut theirs to 195. Bernstein cut theirs to 180. Both cuts, both still above today. Now the great investors, and the first one is brutal. Benjamin Graham published a screen in 1949. Take the earnings, take the book value, which is what would be left if you sold everything the company owns and paid off everyone it owes. Then take the square root of 22.5 times both. It was built for factories with machines in them. Reddit's answer is $40.70. The screen says this is nonsense. It says that about almost every modern platform. Peter Lynch was kinder. His rule was simple. A fair price measured in years of earnings is roughly the growth rate. Reddit's own guide points to about 48%. We capped that at 40. Past 40 you are not investing, you are hoping. 40 years of earnings gives $172.47, almost exactly today's price. And now the best question in this whole business. Stop asking what it is worth, ask what today's price already assumes. Run the cash machine backwards from $177.91 and it needs the cash to grow about 20% a year for a decade before it slows. Last quarter, sales grew 61, so the market is not asking for heroics, it is asking for less than half of what just happened. Which brings us to the machine. Instead of predicting one future, it rolls the dice on 10,000 of them. Some where Reddit keeps compounding, some where Google turns the traffic down, some where the ad market rolls over. Every roll prices the stock. Stack 10,000 answers and you do not get a guess anymore, you get the shape of the future. Here is what is in the dice and none of it is invented. How fast the cash grows, how much revenue survives to the bottom, what money costs and what Reddit settles down into, then 4 named shocks, each one lifted from Reddit's own filings. Google sends less traffic. The 2 licensing partners walk, American users stop growing, the ad market turns. 10,000 futures, 1 fixed seed so anyone can run it again, every input a public number. The middle answer out of 10,000 is $248. 68% of those futures land above today's price, but look at the width. That width is the honest answer here and it is the whole point. So what would actually move it? 4 things and you can watch all 4. Growth against the company's own guide, whether Google keeps sending people. How much revenue survives to the bottom line because Reddit pays its staff partly in shares, that is 12% of revenue and it is real money, and interest rates. Quick, honest ask, we are a brand new channel and subscribing is how we know you want more of this. That is the whole ask. One more and it is a stress test, not a prediction. We borrowed the worst crashes in market history and asked one question. If it happened again, where would the maths land? Apply those falls to Reddit's own high. Microsoft's path gives 104, the Nasdaq's 62, Intel's 51, Cisco's 3961. Now the other side, even in a bust, if profit falls by nearly half and the market pays 20 years of it and you add the cash in the bank, you get 59.75. The panic maths and the earnings maths disagree. That gap is where the money moved in 2002.
So, 8 models, 1 company, 1 night. The lowest said $98.81. The highest said $363.51. That is not a rounding error. That is a real argument about what Reddit actually is. Take the 5 that vote, and the middle of them is $187.50. Today's price is $177.91, 5% apart. So the models say fairly priced, which is the least satisfying answer and the most honest one. The index buying is real and it is temporary. The cheap against dear argument is real and it is unresolved. And the one thing that decides it is in no model at all. It is whether Google keeps sending people and whether Americans keep coming back. None of this is financial advice. These are deep models built on public numbers and every model on this board has been wrong before. That is exactly why we run all of them. Which stock goes on the table next? Tell me.